The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you. Now, Top Tips Wednesday continues with Your Money, Your Call.
Good evening and welcome to Your Money, Your Call. I'm Jeremy Hook from TMS Capital. Joining me tonight on the panel, we've got Tony Licantro from Alto Capital. Welcome, Tony. And Michael Heffernan from Phillip Capital. Michael, good evening.
Thank you, Jeremy. Good evening to you and to Tony as well.
It's a star-studded panel tonight, so at home viewing, please pick up your phone and give us a call. We've got somebody who'll cover the top end of the market and certainly somebody who'll cover the rest of the market. And you're very lucky there. 1300 30 34 35 is the number to call us on. You can also ask questions via email. The email address is yourmoney@skynews.com.au. And we come with the show tonight after another good day on the market. There is some pricing pressure building up a little over a week ago. People were very uncertain. They sound a little bit more confident at the moment. Michael Heffernan, how are you seeing the market?
Well, the way I see today, in a bit of a longer term context, if you look at the last 5 trading days, Jeremy, the market's up about 2%. And that's about the best group of 5 trading days, not necessarily a week, it was a calendar week, but 5 trading sessions. My scorecard showed that it was the best since November to get that sort of result. So, you know, in the last week, there just seems to be a bit of solidity, a bit of stabilisation going on, which I think is very positive. Not to say that it's going to continue at this rate forever, but I think things aren't looking too bad. Business confidence is good. Consumer confidence itching up a little bit. So with the banks, major banks, apart from the CBA, reporting in a few weeks' time, you know, there's a bit to look forward to. So hopefully, with the IMF's world economic growth going well, with markets not falling in a heap, I think we can look forward with some anticipation to the rest of the year.
Tony, do you see confidence returning? Is it, or was it ever not there?
I think what I'm seeing in the junior end of the market at the moment, it's a bit of a trading frenzy. All the chat channels, Facebook, Twitter, Hot Copper, they're all going nuts at the moment. And a lot of people are now punting anything to do with batteries. We've got nuggets in the Pilbara, and we've got SAS software as well. So at the moment, I haven't seen this sort of trading frenzy for quite some time. Everyone is just chasing the moving stocks. And I guess what I'm trying to do with my clients is keep them calm, because once you start getting anxious, that's when you start to make mistakes. But at the moment, it's one heck of a promoter's market. Like the 2 names at the moment are Tolga Kumova and Klaus Eckhoff. So these are guys in the mining sector, and people are just going for whatever they're on.
So a lot of exploration stocks doing well. Capital raisings coming on the back of that. What tends to follow that, Tony? What's the next sort of phase in that dynamic?
Well, you often get a lot of drilling, and one of the disappointing things about exploration drilling is most of the time you come up with zilch. So what I see now is a lot of these companies with these share price rises will start to raise money. And a lot of these, once the trading ranges in these stocks gets out a bit, a lot of traders will start losing money. They'll start fighting with each other. They'll start lying about how much they're making. And I think you end up with another batch of people that get wiped out. So this is just a repeat of cycles I've seen since I've been in the industry since '98. So very dangerous at the moment. And a lot of these stocks, they're running on hype. You're getting 80, 90 mil market caps that have got a board of directors and a dream. So this is probably the most dangerous trading conditions I have seen for some time. Mind you, insiders, those in early, are going to make a lot of money. So beware.
Hef, on the other side of that, looking at industrials that benefit from some of this activity, some of those mining services companies have had big moves up.
Well, that's correct, Jeremy. In the last year or so, some of the best performers have been mining services stocks. I would, I haven't been a great enthusiast of them. I thought they were a bit problematic, but more generally on the resources sector, BHP, Rio are doing particularly well. In their blue chip stocks, they're not the sort of stocks that Tony has been referring to. I mean, the market's there for all different sorts of players, but if you're in there looking for growth and reasonable growth, a fair degree of safety, okay dividends, those resources stocks are the ones that I tend to focus on for my clients. But noting that mining services, Monadelphous, Mineral Resources, for example, the larger mining services stocks have done particularly well. If you're in there a year ago and bought them, well, good on you. But I think for mine, there's a number of other stocks that have done really well to boot. The CIMIC over the year, Macquarie Group. There's a number of other good stocks that are up over 20% over the last year.
Yeah, I agree. I was noticing today quite a number of better names, I would describe them as, getting quite pricey. And so that'll be a theme, I think, there as market has overloved a few particular sectors and stocks. But let's get to our first caller. Debbie's called from Perth. Welcome to the show, Debbie.
Thank you very much. I would like to hear the panel's thought on Strike Energy, considering the amount of gas problems that they have over the eastern states.
Okay, yeah, thanks for your call, Debbie. We'll have a look at Strike Energy for you. I'm going to go to Tony. Tony, what do you know about Strike?
Yes, trading around 7.1 to 7.2. They are in the southern Cooper Basin, and they do have exploration funding from under the PACE scheme. So at the moment, they do have resources in place, and they do have gas production underway. So the market cap at the moment is around $78 million. And they now are based in Adelaide.
Excuse me.
So with the upcoming gas shortages and all the debate around it, this certainly looks liquid.
Please.
And at these prices, I'd be buying it for that gas shortage.
So that's a pretty low market cap, Tony. A lot can go right when you've got some gas and
that's okay.
A market cap of, what, 78 million?
Yeah, it is. It has been quite a lot higher. A lot of these oil and gas stocks have come under some pressure. However, interest is now returning. So this would be a trading buy for mine.
Yeah. Mike, comments regarding gas generally. I mean, this has been probably one of the biggest stories in the business world over the last couple of months, but probably years. Any particular stocks you can see that are likely to benefit?
Well, I think this is it's an imbroglio what's going on with gas in this country at the moment. But I tend to look at the major energy and gas stocks here, and I've been a supporter, if you like, of AGL because of its involvement in renewables as well as traditional energy sources. But more recently, I think Origin Energy now looks to have thrown off its legacy issues of its expenditure in northern Queensland, and also Santos has been a great performer over the last year as well. They're the one, and Woodside not too bad as well. So they're the ones that I'd focus on. If you have clients, and a lot of my clients may have some of the major energy stocks, gas stocks, but it's subject to a lot of uncertainty at the moment. So you've got to be a bit cautious there. But if you're involved in with a focus on safety, probably AGL, and then if you want to take a bit of a punt, you could have a bit of a go at Origin and might have some strong growth over the future. So that's what I concentrate on rather than the smaller ones, Jeremy.
Okay, yep, no problem. And thanks, Debbie, for your call. Nick's called in from Melbourne, so welcome to the show, Nick.
Hi guys, I have two companies in question. The first one I've had for over 4 years. It's called MyNet Phone, which is MNF. Okay. Has done quite well. I'm just have been selling down as it's become larger in my portfolio. Yeah. Just if you get your idea on that one. The next one is Netcom Wireless, which is NTC. They're a small business which is in the telco or NBN space. Mm-hmm. I'm just wondering about that one. Thanks.
Okay, yeah, thanks for your call, Nick. We'll have a look at those two telco-related stocks. Netcom selling particular products, for example, to the NBN, and that should have been doing well, but it hasn't done quite as well. Michael, what do you think of these two stocks in a sector which has been, we'd have to admit, under pressure this year?
Well, they're a bit smaller for me, and they're not the ones that I tend to focus on as well. But if you're looking at the telecommunications area more generally, I'm not enthused, frankly. Telstra has been a monumental disappointment. TPG have, Vocus have as well. The two that the gentleman has mentioned are not those that I've closely followed. So maybe Tony has got more views on that than yourself, Jeremy, than what I do. But I tend to steer away from the smaller stocks because they're subject to great volatility. If there's not much liquidity there, you've got to be very, very careful. If they're smaller stocks and there's some key people involved in the thing and they leave, there are worries. So I guess you can get the flavour of what I'm saying is that when I look at the 2,000 stocks on the market, I tend to steer away from the smaller ones until they can show some robustness and essentially start making some profits.
Yeah, no, thanks for that, Mike. And I will go to Tony. I guess the point I'd say to Nick, firstly, is the way he framed his question was quite interesting. Clearly having two stocks with different performance, Netcom's struggled a little bit. My Netphone's done really well. And I'd probably encourage you more to look to hold on to the better performing My Netphone, Nick, which I think's got a good track record and good earnings momentum at the moment, whereas Netcom seems a little challenged. It may be a bit underloved and cheap at the moment, but cheap is probably the second criteria. Quality is the more important criteria, and I think My Netphone delivers on that front for you. Any comments from you, Tony, on that?
Yeah, I see that Netcom have there's a court case that's just been filed against them, but they expect it not to impact on the NBN services. So that, again, that might be hanging over them. And My Netphone, what can I say? I think I looked at this at a 20-cent IPO, and I think a lot of people laughed at it, but no, that's unbelievable. And I think its PE now is above 30 times. So quality business, but you are paying for it.
And we're sort of seeing that in the market, just to take that theme too, Tony, and just about good quality stocks or the ones that the market does like. I sort of led with that comment, but 30 plus times earnings is not uncommon.
No.
And we're seeing that. Is that just too much?
I think so. You've got to look at what happened to Domino's Pizzas. That got absolutely slaughtered, cut in half, pun intended. And now, actually, we were discussing Invocare prior, that it's well above 30 times earnings now and has rallied from $10 to about 16. So whilst we know that death's a sure thing, sometimes you are paying too much for a good business. And again, their growth's limited. So I think the high PE stocks in a market rout, which there's a chance of that, are going to get slaughtered. So I'd probably steer clear of them. I'd look through the next batch of companies that are showing earnings growth.
Have that theme, the stocks with pure overvaluation based on metrics such as PE, but are going up. I know you've got a theory about stocks going up.
Well, I like stocks that are going up, I'm not all that enthused when they start going down. And as people might know, they breach my selling rule when the market is flat and the stock falls 15%. But you know, stocks that have got high PEs don't necessarily frighten me. Domino's Pizza was just mentioned before, and it did get hit. Broke through the selling rule down, but I think now its PE is not as high as what it was when it was up at about $80, and now down at around the $40 mark. It looks quite good. Blackmores is another one that got cut down substantially. Was $215, went down to 88. Now it's up about 30% in the last year. High-ish PE ratio, but not too high. Look, if they're good stocks, the more important thing for me is what their future growth is. Now, you can look at stocks that take the prize in that area in the blue chip arena, and that's CSL and Cochlear. Now, they've got high-ish PE ratios, but they always have. And the reason is because they've been producing the results. And their future profit growth, I think CSL has even more recently, just today or the other day, looked like their future profit growth is going to be even more than what they indicated at their last AGM. Now, when you get that strong future profit growth being repeated year in, year out, its PE ratio is going to go up because people believe it's going to continue, and it's going to continue because its profits are going up. So that's the theory that I look at, but I always am conscious of the fact that if a stock goes up very high, you've got to be cautious, and then if you see it fall back when the market doesn't, that's an alarm bell for me, and that's when you look at it like you do with Domino's and even with Ramsay Healthcare in recent times. So, you know, there's all these moving pieces that you've got to watch with all stocks, but I suppose particularly with those high PE stocks.
Great, yeah, no, that's a good discussion to frame around that question there from Nick, so we thank him for his call. We're going to a break now. After the break, we'll be back with more of your calls. Again, a reminder of the number to call us on to ask questions of the panel, 1300 30 34 35, and the email address is yourmoney@skynews.com.au. We'll see you very soon.
The best way to predict the future is to create it yourself. Technology has progressed at incredible speeds over the past 100 years, but it's a drop in the ocean of what's to come. Our world is no longer linear. It's exponential. We have the world's knowledge at our fingertips, but few of us are truly prepared for the transformational change happening around us. The first ever Singularity U Australia Summit is happening in Sydney this February. Join us so you can understand, adapt to, and thrive in an exponentially changing world. Visit singularityuaustralia.com.
Kia Sorento is tuned for Australian conditions. It's been tested on the harshest of roads, from inner city to outback, so that ride and handling is second to none. Kia Sorento, it's made for Australia.
A rental property can be a rewarding investment, but even with great tenants, there'll always be life's unavoidable accidents and uncertainties. Standard building insurance may not cover damage caused by tenants or loss of rent, leaving you out of pocket.
Terry Shear is Australia's leading landlord insurance specialist, with landlord insurance from $1 a day to protect your property and rental income.
Call Terry Shear today or go online.
Elvis, the Wonder of You tour is returning in 2018. Elvis Presley live on the big screen, backed by a 40-piece orchestra. Tickets on sale September 29. elvislive.com.au.
The Australian government is transitioning our energy network to be more affordable, reliable and sustainable. We've secured agreements from retailers to give consumers a better deal. We're ensuring there's enough gas for Australians before it's shipped offshore. We've started on Snowy 2.0 to power 500,000 homes, and we're investing in new solar farms and battery storage. Australia has the power to lead by example, so we're powering forward. Search Powering Forward to find out more. Authorised by the Australian Government, Canberra.
Billions of zeros and ones. They inform us, connect us, even entertain us. They offer countless opportunities. But what if we had the power to craft all of them in one? The new BMW 1 Series. Ultimate performance, truly connected.
How crazy are our global warming policies when the government now has to pay us not to use the electricity it's been subsidising? And meanwhile, all the media can do is attack Tony Abbott. We need some straight talk on this. Mark Latham will be on the Bolt Report, only Sky News Live.
Welcome back to Your Money, Your Call. We're still taking your calls about questions for shares on 1300 30 34 35. And the email address, if you'd like to email a question, is yourmoney@skynews.com.au. So we can cover all parts of the market with our panel tonight. Tony LaCantra, the smaller end, particularly resources, And, well, Heffy can do the rest of it, so that's great. Our next caller's on the line. We've got Brett from Sydney. Hi there, Brett.
Hey, Jeremy, how are you, mate?
Yeah, well, thanks.
I'm glad you're on tonight because I really respect your opinion on stocks.
Thank you.
The stock I'm ringing in about is SW1 Swift Networks. I rang in 4 weeks ago about it, but no one on the show knew anything about it. So I have a feeling you may. Jeff Wilson, 4 weeks ago, took a major shareholding in it. As soon as he buys something, I just follow him. The guy's a freak. It's up 33% in 2 days, right? Amazing. They did a road show the last 2 days, and I'm just wondering if you or anyone you know went to the road show. One thing I've got to give Jeff Wilson is the last 10 stocks I've bought, which he's taken major shareholdings in, they've gone up 10 to 30%, right? And Rene Rifkin, when he was alive, and WAM Capital floated at $1, I'll never forget Rifkin's words. He said, follow this guy, he's very intelligent, keep your eye on him. Now, that's one good thing Rene Rifkin did say in life.
Very good.
Your opinion, thank you.
Brett, thanks for your call, and we'll look at Swift. Former boss of mine, Rene Rifkin, and Jeff Wilson, a highly admired member of the investment fraternity. We'll go to Tony Lecantra and see what he knows about SW1 is the code for Swift Networks. Tony.
Yeah, no, I was looking at this quite heavily, around 20 cents, and the stock just kept on going sideways. Once, as a caller mentioned, once you have that Wilson influence, it does put on a lot of traction. They are into digital entertainment. They've just signed a contract with Batcare, which is aged care, and also another international provider. So they are winning contracts at the moment. And I guess the key for my clients is we like to look at these stocks before Wilson gets involved. So I'm looking way down the food chain at much smaller companies that have similar growth potential. But this has really taken off. And it looks as though it probably is due for a bit of a rest, but this is certainly one to keep an eye on that could turn into a decent growth story if they keep that momentum going. So well done on that. And again, it just shows the power of what a rock star fund manager can have on a stock, where you look at that in geology, tech, or anything else. So again, one to look at probably on a pullback.
Thanks, Tony. I didn't go to the roadshow, Brett, but somebody who goes to a few roadshows, an old fellow at the roadshow, Hef, what do you think of Swift Networks?
Well, certainly the graph looks pretty good. I'm always pretty wary of something that goes up 30% in the day. But, you know, if it's really good, I mean, the thing that people have got to bear in mind is that share prices are only going to go up if the company is making some profits. Now, if the company's not making profits, you're betting on the future being exactly what they say it's going to be without any money coming on the table. So you just got to be very, very careful about that. I might say, look, if you're looking at stocks that have gone up a lot, and I look at the market, you can see a stock like Kogan, for example. It's an online stock. You know, a smaller version of Amazon. It actually produces profits. It pays a dividend, and it's up well over 100% in the last year. It's had 3 profit upgrades, I think, recently over the last year. It's done very well. WiseTech is another one in logistics for infrastructure stocks. Again, it's up, I think, over about 100% in the last year. So you don't necessarily have to go to ones that are, if you like, more on the blue sky. There are things right in front of your eyes that are actually making a profit, paying a dividend, and have got good prospects. So, look, I don't want to put down the fact that there's a lot of these stocks that go through the roof. Good on you if you're on them. But I think you've got to be very, very careful, and you've got to be ready to move on if things don't actually turn out the way they should. So all those stocks can be in one category, but I guess I tend to focus on other stocks like your Kogans and WiseTechs, for example, that are actually making a profit, paying a dividend, and have got pretty good prospects.
Yeah, no, thanks, Hef. Look, what it is interesting to state is that a couple of things that Swift have got in their favour, without knowing it to any great detail, Brett, is that the market cap's relatively low, and even with the price movement we've had now, it's circa 50 million, which isn't large. It's very, very light on. And then when you've had 2 important announcements that are revenue creating, that's enough to excite the market at any stage. Clearly, timing becomes important because getting yourself set, you know, years before good announcements move the price is one thing. Obviously, we prefer to get our money working as hard as it can, and these announcements have been very timely. So when you take a stake, as a major fund can do sometimes, or large investors who are desired to be on the register of a company. They often obviously are told where the business is at, including some of the potential scenarios for contract wins and revenue growth that may appear. And that clearly seems to be the case here with Swift Networks. Certainly one to watch, and well done, Brett, for picking Swift Networks. Thanks for your call, Brett. Okay, moving on to our next caller. We've got Ken, who's called in from Brisbane. Hi there, Ken.
Good evening, Jeremy. Thanks for taking my call.
You're welcome.
The share I'm interested in is Triton Resources.
Okay.
I believe they're in the same area as Syrah, which is doing very well recently.
Okay.
And I was just wondering what the panel thought of Triton, please.
Yeah, terrific. Thanks for your call, Ken. Triton Resources, the code is TON, and there was a name mentioned there, Tony Lecantro, that you're certainly familiar with, Syrah. So tell us all about Triton Resources.
Well, this in the first round of the graphite bubble, these actually went for about 90 cents, then actually went to voluntary admin, of all things for a company to do. But at the moment, look, it is getting a bit of a tailwind on the back of Syrah Resources. Now, they are moving towards a definitive feasibility study on their project in December 2017, which is only a couple of months away. The stock is trading around 81 to 82 cents, and there has been a resurgence in everything battery, from graphite, cobalt, to lithium, vanadium as well. So certainly one to watch. Again, I didn't go near this stock on the first run, so you are banking on a decent study result. However, the momentum really from the graphite sector has suffered, and it's not as powerful as the likes of lithium or cobalt. So one to watch, might be worth buying on the DFS in December.
Right, okay. So that's... now, how's the share price performance been of late?
Oh, fairly stable.
Okay, yeah. So
yeah, it has ticked up a little bit, but again, this was a high flyer that, as I said, got to 90 cents, then went under.
Yeah, okay. So a bit of news coming there. DFS in December, I think you said, Tony. Yeah. So that's not too long to wait, Ken. And thank you very much for your call on that one. Righto, we're going to go to a little bit of a snapshot here about the most difficult stock you've ever invested in. I've got Michael Heffernan. What's the most difficult stock you've ever found to invest in, Mike?
Well, if you define difficulty as being ones that are very disappointing, as I would, then I think the pick of the bunch would have to be Telstra. And what's happened over the last couple of months, I think, is pretty much unbelievable for a major top 10 stock. I couldn't believe what happened at up at over $6, had a leg down to in the $5, then put out a report which flabbergasted me, I might say, but the decline happened so rapidly that there's very little you could do with it. And now you've got some, a much reduced dividend and a much reduced share price. So, look, it takes the prize as the most disappointing stock. Yeah. And I must say, or difficult to use your words, if you like, Jeremy, Telstra's been through it before. It was down at $2.60 around about NBN time. So and then it picked up to $6. But it confounds me.
Yeah, and many other
moment.
people too, Tony, Mike. Yeah. So we'll come back after the break, and we're going to see if we can get a joyous stock from you as well, and we'll ask Tony the same thing. So we're going to that break. After the break, more of your calls and questions. 1300 30 34 35 is the number to call us on.
When you think about the future of mobile, what comes to mind? High-speed internet? Remote control? A high-definition touchscreen? Controlling with a gesture? Or going from 0 to 100 in 5.1 seconds? We've been thinking about the future of mobile for the past 100 years. Introducing the all-new, all-innovative BMW 5 Series.
A rental property can be a rewarding investment, but even with great tenants, there'll always be life's unavoidable accidents and uncertainties. Standard building insurance may not cover damage caused by tenants or loss of rent, leaving you out of pocket.
Terry Shear is Australia's leading landlord insurance specialist, with landlord insurance from $1 a day to protect your property and rental income.
Call Terry Shear today or go online.
Hello, I'm Andrew Johnson, CEO of ACS, and welcome to another episode of Industry Insights, a series of interviews where we ask industry leaders to share their views on the rate of Australia's digital transformation. In this episode, we are joined by Robert Hillard, Managing Partner of Consulting at Deloitte Australia.
Right at the moment, we're seeing a rate of change which is greater than any of us have seen in our working lives. So there is no industry that can afford to be complacent, and nor can government afford to be complacent. Google came up with this term, moonshot, to talk about projects where they do something that's so outrageous that everybody looks at and says, there's no way we could, no way you could do that. It's something like a self-driving car. It's completely out there. And I challenge us as to whether or not we are looking at enough of those moonshots that are going to give us those breakthrough productivity benefits.
Another one of our viewers, what should we do to compete in this technology industry as a graduate?
Opportunity for graduates right at the moment is greater and better than ever. Yet we know the jobs that we're going to be employing people into will only last a year or 2 years at most, and then we're going to want them to do radically different things. Don't assume the skills you have today are going to be relevant in 2 years' time, and don't be afraid of that.
To watch the full interview with Robert and more from this series, visit acs.org.au.
At SCW Eurodrive, we're all about solutions. From geared motors to heavy industrial gears, simple frequency inverters through to sophisticated decentralised technology or servo controls. SCW can tailor a package to suit your requirements. German technology, Australian know-how, local assembly, sales and service. SCW has the drive to keep you up and running.
Welcome back to the program. If you've got a question you'd like answered, call us on 1300 30 34 35 or email yourmoney@skynews.com.au. Okay, we've got Tony Lecantro and Michael Heffernan here to answer your questions. Richard has called in from Brisbane. Hi there, Richard.
G'day, Jeremy. How are you?
Yeah, well, how are you?
Not too bad, not too bad.
Good.
Hey, I've got a question that's aimed at Tony.
Sure.
Triangle Energy, they're currently joint venturing with Norwest Energy and others in the Xanadu well in the Perth Basin. And I think they've completed the drilling and waiting on results. Just wondering what Tony's view is on this well and the wider prospects in the Perth Basin for them.
Yeah,
Thanks.
great. Thanks, Richard, for your call. Tony, the Perth Basin's certainly been productive over the years. How's Triangle looking?
Yeah, good to finally see some success, especially for Norwest, who have been around for quite some time. Now, Triangle have 30% of this well. There are flows of hydrocarbons, and they are getting quite a lot of very good sniffs in that one. So again, a bit hard to value at this stage of that discovery, or could be a potential discovery. They're probably going to have to run further wireline logs and just work out how good or economic this discovery potentially is. Now, the reason why Triangle Energy has done so well is they own about 35% of a company called State Gas. Now, that stake at the moment, with State Gas in the mid-40s, is around $16 million. So at the moment, Triangle Energy has been a bit of a cheap option on State Gas, which I believe only listed a couple of days ago. So you've got the combination of having a big holding in State Gas and this Xanadu discovery in the Perth Basin. So certainly one to watch, and around 20 cents, I'd continue to accumulate it.
Excellent. Yeah, thanks, Tony, for your answer. Thanks, Richard, for your call. Michael Heffernan, before the break, I asked you what your most difficult stock was. Well, it would only be fair to ask you, which is a stock that keeps giving? What's done more for you on the upside over the years than you ever thought possible when you first bought the stock?
Well, there's not much doubt about that one, Jeremy. It'd have to be CSL. You know, it started off back in 1993, I think at 94, at around about $2.20 or something, and it's gone up to, went up at one stage to $300, and then they did a 3-for-1 split, went down to, or $100, 3-for-1 split, went down to $30. And now it's back up $130 odd now. I mean, it's just been absolutely phenomenal. And if you look at it on the unadjusted basis, it's well over the $300 or $400 when it started off at $2. You know, that to me has just been a stock that keeps on giving, to misquote some advertising slogan from somewhere or other. But
Absolutely.
It's been a great one. And the other one in the CC, and that's Cochlear. Another great stock. They've just been absolutely fantastic performers. And I'll throw in a third leg of the trifecta, if you like, and that'll be the Commonwealth Bank. Come in for a lot of stick lately for one reason or another. But it started off at $5.40, went up to $96 a couple of weeks ago, about a year ago, before the trouble started. Now back to about $75, $76. But it started at $5.40. So, they're three stocks that I think have been absolutely stunning performers. And if you had them in your portfolio from the privatisation that happened with CSL and CBA, for example, you'd be on clover at the moment.
They're all C's, and two of them were spun out of the government. They were obviously government-sold assets, and the other one, Cochlear, was spun out of, if everybody can remember, Pacific Dunlop. So
that's exactly right.
Incredible,
you're right, Jeremy.
So well done, and their stocks that have kept giving. Amazing. Our next caller's on the line. We've got Ben, who's called in from Brisbane. Hi there, Ben.
Hi, thanks for taking my call. Just like to check with Gary, is he still liking Metal Bank, and has he got any price targets, please?
Yeah, no problem. Thanks, Ben. I think you're probably referring to Tony, who's Gary on occasions, maybe a nom de plume or something, Tony?
Yeah.
Gary, Tony, Metal Bank, that's the one we want to know. Ben wants to know about Metal Bank, please.
All right. If I wasn't on this show every few weeks, I'd grow my hair back so I could pull it out. So, look, nothing's changed with this stock. Everyone keeps ringing up about it, pretty much because the price does jack. But at the moment, they would have started drilling on the weekend. That is a hugely prospective gold target at Triumph. I'm looking towards 2 million ounces potential. It might take a couple of years to prove up. My price target remains 12 cents. Now, all I can do is control the fundamentals of this company. I can't control nervous shareholders from selling it. Every time someone sells, it's like a bunch of lemmings going off a cliff. So look, this market cap's still low at about $14 million. He has 3 in the bank, and they are doing some drilling now to identify the big target, and they're only one big drill hole away from fame. So again, I'll keep reiterating it. I love this stock. It hasn't been kind to me, but I'll persist.
So it's really an exercise in patience, Tony, drilling results to come, and you, as an investor in this space, it doesn't all happen at once, is what your message is?
Well, I raised the money at 0.4 cents and it went to 4 cents. So my clients were spoilt then. I then raised them some money at 3. And I think people, unless you want to chase some of this rubbish running, you have to be patient. And this is a real company. And they're real people, got real backers, and we could have a resource. And 2 million ounces is worth $120 million. And I look back, I did the capital raising for Northern Star when they were 5 cents. And it took them pretty much 6 years to really get onto it, but that stock went up 100 times. And there were lots of corrections along the way. So you just need to be patient. Get onto a fundamentally sound stock, do the research, and just wait. And yeah, again, if I could wear a beanie, I'll grow my hair back. So there you go.
I don't think none of us want that.
No, it'd
Gary.
be shocking.
Thanks for your call, Ben.
No worries, Ken.
All right, now we have an email to look at from a viewer. So thank you very much for the email that's come through. We would appreciate the panel's opinion on AMP. AMP have just received an improved rating from Credit Suisse in the last day or so. AMP is also subject to speculation of a takeover. Is it a buy opportunity? Thanks, Wayne, for your question. Gee, I tell you what, it was a bit of a move up on AMP today. They changed a few of the deck chairs on one of the equities desks, I believe. But I'm not expecting a takeover personally, and I don't think it's a stock to buy. But I'm going to ask Michael Heffernan what he thinks.
Well, you know, the AMP has been one, I was talking before about a stock that keeps giving and giving. This one keeps taking away, keeps taking away, keeps taking away. You know, it's been an absolute disappointer, AMP, no question at all about that. You know, hanging around about the $5 mark or wherever it is right now. It's not one that I'd be encouraging my clients or website subscribers to get into, and I haven't been for some time about that. You know, you've got to look at its growth prospects, and it just doesn't seem to be able to crack a winner. I wouldn't be buying it because of rumours of takeovers or something like that. That's always a dangerous venture in my book. Buying things on a promise. You've got to look at the fundamentals and what its prospects are, and I don't think that's the one that I'd look at. If you're looking at a stock in the wealth management area, I think IOOF, for example, is a very good alternative. Challenger Financial Group, Platinum and Magellan, they're all stocks that I think are much better performed in the wealth management, funds management area than what AMP is. It might have gone up a bit today, but you'd need to see this happening on a continuing basis over the course of the period ahead before I'd be convinced that maybe things are different and it's worth a go.
Yeah, no, excellent. Thanks for that. Mentioned some very good stocks that are also in the same space. Each of them, in my opinion, I agree, are better than AMP. But we do thank the email, and we're going to go to another break now. It's a short break, and when we're after the break, we'll be having more of your questions. Again, the number to call us on is 1300 30 34 35. The email address is yourmoney@skynews.com.au. We'll see you very soon.
Billions of zeros and ones. They inform us, connect us, even entertain us. They offer countless opportunities. But what if we had the power to craft all of them in one? The new BMW 1 Series. Ultimate performance, truly connected.
A rental property can be a rewarding investment, but even with great tenants, there'll always be life's unavoidable accidents and uncertainties. Standard building insurance may not cover damage caused by tenants or loss of rent, leaving you out of pocket.
Terry Shear is Australia's leading landlord insurance specialist with landlord insurance from $1 a day to protect your property and rental income.
Call Terry Shear today or go online.
Wanting something so beautiful doesn't need to be justified or explained. How it makes you feel is reason enough. Secrets, the most perfect diamond simulant. Secrets.
As you age, it may feel like your body's not keeping up with your lifestyle. Be proactive about your health and nutrition with Sustagen Hospital Formula Active. With a new look, it's the same trusted formula with key nutrients like calcium to support bone health, protein for muscle health, and energy to be active. Find the full Sustagen Hospital Formula Active range in pharmacies and a new 480-gram size in Woolworths supermarkets. This has been Medifacts for Sustagen.
In a world where nothing is as it seems.
Seems fine to me.
In a toilet where danger lurks.
Honestly, Duck makes toilet care simple. Gets it clean, keeps it clean, without all the worry. It's not rocket science, it's Duck science.
SC Johnson.
Kia Sorento is tuned for Australian conditions. It's been tested on the harshest of roads, from inner city to outback, so that ride and handling is second to none. Kia Sorento, it's made for Australia.
At the Coffee Club, we've got bright ideas for breakfast, like chunky avo now on a potato rosti, and new ways to lighten up your lunch, like our bacon flat grill and chicken slaw salad from $10.95. Try our breakfast and lighter lunch range today. Where will I meet you?
Building your property empire could take thinking a little differently.
No matter the postcode or potential, whether it's your first jump into the market or adding to your portfolio, they'll take your calls, answer your questions, and add a lifetime of real-world experience to help build your property empire. Margaret Lomas and Chris Gray lead the Property Monday Experts, live from 8 on Sky News Money.
This program is brought to you by Terry Shear, Australia's leading landlord insurance specialist.
Welcome back to the show. We're into the last section of the show, but a reminder of the number to call us on, 1300 30 34 35. The email address again, yourmoney@skynews.com.au. Well, our next caller is on the line. We've got Adonis from Melbourne. Hi there, Adonis.
How are you, Jeremy?
Yeah, well, thanks. How are you?
Good, thank you. Interested in yours and Michael's thoughts on the upcoming Magellan Global Trust IPO.
Okay.
To add some international exposure to my portfolio, and I really like the unique nature of this particular offering. So if you could give us your thoughts. And one for Tony, SEA, Sundance Energy, I'm particularly interested in. Thank you.
Great, thanks for your questions there, Adonis. One for each of our panellists. And I'm going to go to you, Hef. Magellan, I know we're taking up some of the global trust, the new offering that's about to come to market, I believe, October 18th, under the code MGG. But we like the way it was structured. Good way to get some international exposure. What do you think, Hef?
Well, I guess, look, anything to do with Magellan has got to be worth serious consideration. And people who don't mind trusts, I'm not a great fan of trusts, to be frank with you. If you're after franked dividends, for example, well, the trusts don't give you that. But look, anything from Magellan is certainly, as I said, worth serious consideration. Might be very good, but trusts don't tend to have the acceleration of share price growth or unit price growth that the shares do, because they're closed-end things, whereas shares are open-ended and they can raise more money, you know, with placements and rights issues and that. Trusts are a little bit more constrained on that score. So, but look, Magellan, with their track record of being successful on the international arena, I would certainly be looking at it. And if you are attracted to what it's involved with it, then have a go, if I can get my words in the right order.
That's good, that's good.
So there you go. Yeah,
the things that
if you like it, go for it.
Yeah, Adonis, there was a very good offer to anybody who was an investor in any of the strategies that Magellan had prior to the announcement of this new trust, which was going to give a very generous amount of loyalty units to those who held it for 2 months after it lists, so early December. And you know, 6.25%, quite a generous offer there. So we thought it was a very useful one to take up. It will pay an income stream guaranteed there of 6 cents or 4% for the first period, and that's certainly going to appeal to income investors. I think they're going to raise a very large amount of money. They're going to have a job then to get that invested at near the top of the US market, certainly in the short term. But they're skillful and we believe in them. Just before I go to Tony on Sundance, have a quick comment on MFG, which is the actual fund manager itself. Do you like that one?
I like it. No, I do like Magellan. I like the company itself. It's done very well over the last year. It's one of these ones that's involved in many countries around the world, and so when they're picking up, as they are at the moment, particularly the US and Asia, Europe now, Magellan is one to benefit from that. The other one that I might mention also is Platinum, which is mainly centred on the Asian market, Southeast Asian and Asian markets. And in the last year, it's done very well as well. So whereas Magellan, I think, did better, say, the year before, in the last year, Platinum went right down and has picked up a lot. So both of them are good and for different reasons. But Magellan, look, a very good stock, and I have no problem in people who want to get exposure to a financial investment type stock around the world, then you can't go past Magellan.
Thanks for that. Sundance, Tony, tell us about Sundance.
Well, I was having a good look at it. They do have oil and gas in the Eagle Ford Shale in the US. Now, the stock is capped at 50 million, but the real devil here is the amount of debt they have. They actually have about $192 million in debt, and they just borrowed, they've got the capacity to borrow $30 million off Vittle to cover their production costs, and they pay that back through production. So this is massive leverage on the oil price. So not one for me, not with that debt saddling them, and the fact that they're going to need a huge rise in the oil price. Might be a recovery situation, but with those gas and oil reserves and resources, oh geez, a bit of a risk for me, but that debt just scares the crap out of me, to be honest.
Okay.
So.
Good, complete answer. Thank you very much for your call, Adonis. Our next caller on the line is also from Melbourne. It's Ian. Hi there, Ian.
Guys, and thanks for your program. Altium, ALTIUM, code ALU, continuing on the up and up. Great day today, with the new 52-week high.
Yes.
Just wondering where to from here.
Excellent question about a great stock. Thanks for your call, Ian. Appreciate that one. Altium's had a great run. It today in the mid $11, and as Ian mentioned, a 2-year high. Wonderful to see for a terrific stock in the printed circuit board market, and the software market is a leader in its space. Earnings are growing well. It's a great Australian story. I'd just be careful now, Ian. The price earnings ratio is around forecast 33 times, which is lofty. That's high. It sets it up for a potential pullback, and I'd be looking for a lower level to buy in it. It's got a great return on equity, 25% and rising. That's certainly in the top tier of stocks, so I cannot criticise the company, just the price that somebody would be asked to pay if they bought it on the market today. So I'd be looking for a lower price to buy it at, but all credit, it's a great stock. Used to be called Protel once upon a time, HEF, and one of the standouts in that IT area. Do you like Altium?
Well, look, I like stocks that produce results, and when you look at Altium, I look at momentum on stocks. If they're up in the last week, the last quarter, the last month, and the last year, all up, and Altium's there. And from what you're saying about return on equity and all this sort of thing, all great indicia of a strong stock. The only caveat I'd put on, you alluded to this, Jeremy, I mean, it looks like it's climbed the Matterhorn in recent times. So, you know, you can start to get acrophobia at that level. So you've got to be very, very careful, because sometimes they'll come back a bit, and this is where I suppose, again, my selling rule comes into play. So you've got to watch it. If the PE ratio is very high, the stock has increased dramatically in a very short time. What you need to get from that stock is it's got to have very strong future profit growth, which I mentioned a bit earlier on. And if there's a report that misses, say, the expectations of what the company provided to the market previously, then it can be cut back a bit. So look, be very, very careful. Great stock, I agree with you, Jeremy. So if you've got it, that's great. If it's going up, it's going in the right direction, but just be careful that it might change gear at some stage, and then you might have a different decision to make.
Okay, well, I had cause to look today at Domain, which is a soon-to-be listed spin-off from the Fairfax Group. People will know that as one of the leading property portals in Australia, number 2 to REA Group. And I think many of our investors who invest in shares but also keep an eye on property are aware how well property's done, but it's obviously started to pull back a little bit. What was interesting in looking at it was, as well as property has done, REA Group, as the leading portal listed on the market, has been a 10-bagger over the last 10 years. And we mentioned about stocks before that have continued to keep giving, but REA is certainly one of those that's done that. Domain is coming to market. Fairfax are retaining 60% of it and spinning off 40% by virtue of an in-specie transfer to existing shareholders of Fairfax on a 1-for-10 basis. Michael Heffernan, have you had a look at Domain, and any comments, if you have, about it, REA, and maybe the broader property sector as well?
Well, I haven't looked at the entrails of Domain, but what I do know about Domain is that I think it's going to be a powerful second major force in the real estate internet arena. And I think, you know, it has been, from my experience with Domain, when you see it around the place and you see various real estate agents advertising through it, I think it's going to be there. It's going to pose a, if you like, a real competitive threat to REA Group. REA Group, as you say, Jeremy, it's been another absolute fantastic performer, and it still looks good. It's done well in the last year. Future growth's still good, but when Domain hit the decks, then I think you've got to reassess your situation. And I would watch Domain very, very closely. Haven't looked at the entrails of it, but I will in the very near future, so that when it hits the decks, we'll be ready to move. But yes, I would be very keen to watch it very carefully, and I think it's going to make some significant inroads into the overall internet real estate marketplace. So REA Group, better be on your toes.
Yeah, definitely. So, and Tony, just to you, I know you've got a view on property, but don't you think a lot of property investors would be surprised how well something like REA has done as a listed equity, trading in the space where probably it's done 5 times better than most property investments.
Well, there's actually nowhere else to go. And a lot of real estate agents use it. It's highly. I go there when I'm looking to rent or buy. I certainly go there, and you don't even think about it. So I think with Domain coming, yes, it's a threat, but this is like the difference between RSVP and Zeus, online dating. You'll see a girl on three sites, and I think, well, they're just trying to sell themselves to the best buyer, obviously, but to me, Domain's everyone's second favourite team, and everyone will go to realestate.com to start with, then they'll go to Domain. They do produce a beautiful glossy magazine with full of mansions, which I look at and go, wow. But for me, REA, it will eat into their margins. It is a threat, but REA's just got the market by the balls, in my opinion.
And you touched on online dating. I was probably more interested in the property comments.
It's the same theory. You just go down the food chain in these sites, but I'm quite negative on property. I think it's going to be like a Rugs A Million, 30 to 40% off everything sale in Sydney anyway.
Okay, terrific. Well, that's all we've got time for on tonight's show. Thanks so much to our guests, Tony Lecantro from Alto Capital and Michael Heffernan from Phillip Capital. And to you, our viewers, for all your calls and emails, if you've missed any part of the show and you'd like to catch up on some of it again, you can just log into your favourite podcast platform and search for Sky News, Your Money, Your Call. Until next time, I'm Jeremy Hook from TMS Capital. Thanks for your company.